and welcome to the beautiful city of Bhopal, from where the IFL CNBC TV 18 investor camp is rolling out. Things have been quite momentous for the market, almost getting to a new high for the Nifty around Diwali and then a sharp correction. So where from here, and more importantly, what are the big events spitted out in 2014? To start proceedings, here was a quick chat that Udayan and I had about how to gauge the market mood right now. Let me start with elections, because the rest of India, for them it happens in 2014, but for Madhya Pradesh very soon. Did the market preempt itself with this entire election euphoria? Does it seem now like the last month was the, a heady mix of the money, as you said, and all this electoral talk?
I think it's added a dimension to this rally for sure. I wouldn't say that the market's priced in NDA victory next year, which is its favored scenario, but you can sense that that is being drummed up. And more than the local crowd, I think a lot of the foreign crowd is beginning to feel that in 2014 there could be an election outcome which might be favorable for the market, because it's not got unnoticed that a couple of very large brokerages like Goldman Sachs, CLSA, they've started talking about it. So it's possible that a lot of global investors, or some of them, have also started positioning themselves for a pre-election rally.
Some of the macros have not been good though. Inflation that all of us feel was an ugly number this week. Earnings have not been special. The kind of jump there's been in bad assets for banks is there for everyone to see. Is it possible that on the macro side things keep dragging through a prolonged phase of recovery, very painful, while on the other side the market actually goes on to do better for itself?
I think the market will climb those walls of worry, Mithali, frankly. I don't think this market on the margin will move in sync with earnings or macro, because that is a known devil. It's been bad for a while. It continues to be bad. So if, as a lot of people believe, that we have turned a corner and the market is set on a slightly more bullish trend from here, unlike the last few years, if that is the case, then the market will rise in the face of bad macro and bad earnings. We'll keep analyzing it, but stock prices may actually not react to or
not marry themselves to the macros.
That kind of news flow at all.
One quick final word on the competitors for the market as an investment option, Udayan. Since that Diwali event, things have actually turned for gold. It wasn't a great year, but now it's picking up. I guess fixed income is still a good option given what's happened with the economy, with how vulnerable the rupee still is. So are competitors still running neck and neck?
My sense is, don't do an all or nothing portfolio. That's what people do in India. Sometimes it's always only fixed income. Sometimes it's only gold.
Only gold.
It usually is not a sensible idea. If you just look back over the history of the last 20, 30 years, an all or nothing portfolio is like buying two stocks and nothing else. If they work, great. If they don't work, then you lose money. I think it's better to spread yourself out a little bit. I know in the last 6 months people have written off gold, but if global volatility comes back in 2014, which should not be ruled out, I think gold may do well once again. Fixed income is still good, and a lot of bond funds are still giving you 10% plus. Fixed maturity plans are giving you 10% plus. I think it's a good idea to keep some of your money, or substantial part of your money, there. The economic cycle may still be bad, but managements are far better than our politicians. So some of our managements are still doing a terrific job of negotiating what is a very tough environment. So even if you don't want to bet on the economy, you don't want to bet on the market, I think you should bet on some of these managements who are still doing an extremely credible job.
So that was a little bit about market sentiment right now, but let's get started with what our experts had to say about the market. First up, here's Dipan Mehta talking not just about the stock market, but the kind of portfolio approach that's required given the environment we live in, and how to set yourselves up for the most profitable kind of year going ahead.
So why is effective portfolio management important? Because if you want to achieve your financial goals, then it is very important that you take a wholesome view of the equity market and decide on certain principles and certain strategies which you are going to follow to ensure that this 15-16% return, which is the targeted return, is what you are able to achieve and generate. So by following certain basic principles of portfolio management, you can avoid the mistakes. First is asset allocation. That means what percentage of your savings you should put into equities. And here are a few thoughts. First one was by John Bogle. He is the founder of Vanguard Mutual Fund. It is the world's largest mutual fund. Whatever your age is, that percentage of your savings should be in debt or fixed income. And there's a sound logic behind it, because as you grow older, the capacity to earn goes down and you are more consuming than producing. So if you have a large percentage in fixed, then you are avoiding all the volatility which is there in the market. And what Warren Buffett says, buy a house before you buy stock. So he's trying to say that protect yourselves first. Make sure that you have a roof over your head before you start dabbling in equities, which essentially is a risky product. Next, we come to sector allocation. Companies which are not performing well, which have given negative returns over a period of time, they are removed from the Sensex or any broad-based index. And the sectors and the companies which are doing well, they are included and they gain more and more weightage. So just by tracking this particular sector allocation or weightage, you will ensure that you are always in the winning sectors in the market and you're avoiding all the sectors which have not performed. So my presentation was speaking about which are the sectors which one should be investing in, what percentage should be in those sectors, which are the stock selection criteria which you must apply for, and which are and how you must go about selling stocks, and which are the selling strategies which you should implement, and most importantly, I think financial discipline, how you can stick to your particular financial plan and make sure that you get the maximum out of equities. So here are a few pointers of what you should look for and what are the criteria what are the signals which come through that now we should be selling this particular stock. Firstly, I think if a stock has got 2-3 bad quarters, bad numbers, suddenly growth is faltering or they have negative growth rates, if there are genuine reasons, it is one thing, but if not, I think it's better off just to knock it off completely. If a stock is 33% from its peak and the market is still quoting around the same level, the Sensex has not gone down as much, obviously something is wrong in that sector or that stock. Don't ask too many questions, first exit. See, the thing is that these selling strategies work when you have a whole diversified basket of stocks. We have seen that companies, which do large overseas acquisitions, which do frequent dilution of equity, which are taking on a lot of debt, where promoters have pledged their holdings, generally don't do well in the market. But by and large, if you follow these broad principles and follow them with discipline, you will find that you have avoided the mistakes, or that if a mistake has taken place, you are able to exit from it quite quickly.
Okay, it's time for a break. When we come back, plenty more from the investor camp in Bhopal, including some interesting small cap ideas that you can work with in 2014. That's coming up. Welcome back. This is the investor camp at Bhopal. It's been an interesting month and a half for the market. Lots and lots of money coming in. But the big question is, when will the mid-caps begin to move and when will retail start getting back into the market? Here's Ambareesh Baliga talking a little bit about that and how best to prepare yourselves for a profitable 2014.
If you have to make money in the next 5-6 months, where do you make money? It is the mid-caps where you could actually make some decent returns and try and recoup the sort of losses which most of you have incurred in the last 3 or 4 years. I mean, assuming if one had a portfolio in 2008 which was 50% large cap, 30% mid caps and 20% small caps, it would have given him a return of 10% in 5 years, 2% per annum. Generally, whenever we look at a stock, we look at the opportunity size as to how big the sector can grow. Over the next possibly 10-15 years, can it grow about 3x, 4x, 5x sort of a thing, And especially when it comes to mid caps, you have to be very careful of the management quality, the accounting policies which they follow as to how transparent the company is. I mean, there are a couple of important things to be looked at in the annual report, and one of that is clearly business with related parties. That is clearly given in the annual reports, and if there is a lot of business being done with related parties, those are some of the companies which we try and avoid. Again, one needs to see as to how professional the management is. We prefer more of a professional management than a promoter-led management. Are there any entry barriers? Can anyone set up a similar sort of a business in a short time? Then no, we are not interested in that business. And it should be a business which one should understand. It should not be a complicated business. There has to be positive cash flows. And again, we compare it with the others in the same sector. We do a financial comparison. We expect a mid-cap rally, and we are suggesting people that they should start looking at mid-caps now as a part of the portfolio, because they could actually outperform the large caps over the next 4 to 6 months and help them recoup to a certain extent what they have lost.
That was Ambareesh Baliga. Of course, every camp has to have its share of interesting stock ideas. Here's Ashish Chuk talking about a space that has been favored by the market, consumer-oriented stocks. So not the Bharti, Airtels and the Jubilant Foodworks of the world, but the smaller, unferreted ideas. Here he is with his hidden gems.
This is a company which is a pure play in the DTS space. That's the only listed company which is pure DTS play. And it's got the largest subscriber base in India and probably the largest in Asia Pacific. Now the strength of Dish TV is its distribution network. This company has got a distributor base of about 1,65,000. I think there is going to be a strong growth in the industry at a market cap of 5,800 crores and almost manageable level of debt of about 1,000 crores. I think it definitely warrants a look as an investment pick from this sector. Vadilal Industries is again, I would say, a small cap pick in the ice cream segment. Again, this is a brand which is quite visible. Of late, this company has been trying to increase its profit margins by moving into the premium segment. But however, given the fact that the market cap of the company is just about 92 crores, now 92 crores for a company which has got 18% market share of a sector which is growing at 15%, I think it warrants a look as an investment candidate. Now, Liberty Shoes, market cap is just about 150 crores. I think this is a company which has got a great brand recall, distribution network, good capacity. In fact, some of the sub-brands like Force 10, Coolers, Gliders, they are also quite well known. The company has got its own retail distribution network also. Now, if you compare this company with something like a Bata or a Relaxo footwear, you will find this company, available very cheap when you compare on various parameters. However, I would like to caution here that this company does an operating margin which is much lower than Bata and Relaxo. And also, there have been no dividend payouts by this company over the last 3 to 4 years. So these are the concerns. In case the company is able to take care of the operating margins and also become slightly more investor friendly, I think this is a stock which has the capability to get re-rated. The idea behind my presentation today was to look at the companies which have a visible brand. They have domestic presence in the Indian economy, and these may be the companies which are still trading at extremely reasonable valuations. So that was the entire gist of the presentation today.
Okay, it's time for another break. When we come back, more on the market, more from the investor camp at Bhopal, and of course, more from our investors gathered here. Welcome back. You're still watching the CNBC TV 18 IIFL Investor Camp coming out from Bhopal. Lots of questions about the elections, lots of questions about whether the market was still heading to new highs. Here is a slice of our audience interaction with our experts.
Presently, these three situations are expected. One is that UPA comes back to power. Second is the NDA takes over. Or the third is that there may be a hung parliament. So in a situation, in these three situations, how the market or the reaction of the market would be?
If there's a hung parliament, then obviously the market is going to get into a bit of a shock and you could see a sell-off taking place. If it's an NDA ruled government with reasonable majority, then you could see a fantastic rally coming into stock prices. the sentiment and the confidence will certainly look up. And I think UPA coming back to power, I don't know, it depends upon what form they come back into power with and what kind of, the next PM and who the other leaders are. And I would say that it's going to be one of the very difficult moments for the stock market as to what position one should take before the elections. And my sense is that it's best to, be a little light and be in cash. And, results can be quite surprising either ways.
Ambareesh, you want to add to that?
One should know of a caveat that if NDA comes, I think the expectations also will go up quite a lot. And one needs to see as to how they deliver. And whatever government would be formed post a hung parliament may not really last beyond 2 to 3 years. So those 2 or 3 years could be a bit difficult. But will that mean like the end of the market? I don't think so. Because you'll see a repeat of possibly what you saw in 96 to 98. Could be quite a volatile market, but would be within a range at a slightly lower level.
मेरा ये कहना है कि अपन निफ्टी आज हाई पे देख रहे हैं, मगर मोस्ट इम्पॉर्टेंट शेयर्स BHEL, L&T, SBI and so many shares are not projecting to get up to the mark. इस टाइम में आप अपने विचार प्रकट करिए कि ऐसा क्यों हो रहा है। और दूसरा मेरा आपसे ये सवाल है कि एक रिटायर्ड कर्मचारी को अगर इस टाइम इन्वेस्टमेंट करना है तो ये अब जो सेमीफाइनल चल रहा है इसके बाद करे या फाइनल के बाद इन्वेस्टमेंट करे। धन्यवाद।
आई वुड से एनी टाइम इज़ अ गुड टाइम टू इन्वेस्ट। इसमें जो है आपको जिस चीज़ में आप इन्वेस्ट कर रहे हैं, आप हो सकता है आप एक स्टॉक खरीदते हो, ये जनरल मेंटालिटी रहती है लोगों की कि जब मैंने स्टॉक खरीदा तो मैं उसका भाव उससे नीचे नहीं देखना चाहता हूँ। अगर मैंने 54 रुपए का डिश टीवी खरीदा तो अगर 48 आएगा ना तो मैं थोड़ा सा कंपनी के लिए नेगेटिव हो जाऊंगा। तो मेरे हिसाब से अपने को बैलेंस रख के अगर आप स्टॉक के भाव से ज़्यादा ना गाइडेड होके और उस कंपनी की तरफ ज़्यादा फोकस करें तो ज़्यादा बेहतर रहेगा। और साथ में जो है आपकी जो रिस्क एपिटाइट है वो सूटेबल है एक इन्फोसिस में इन्वेस्ट करने के लिए या फिर एक लिबर्टी शूज में इन्वेस्ट करने के लिए, वो देख के चलें।
टेपरिंग आजकल एक बड़ा डिस्कशन का मुद्दा बना हुआ है। ऐसा लगता है जैसे मान लीजिए अमेरिका में टेपरिंग होगी तो हिंदुस्तान में कभी कोई बुल रन आएगा ही नहीं। राकेश जी कहते हैं कि अगर लड़की खूबसूरत है शादी करने वाले अपने आप आएंगे, अगर हमारी इकोनॉमी अच्छी होगी तो बुल रन आना चाहिए। आपके विचार जानना चाहेंगे।
लड़की तो सुंदर है लेकिन 5 साल से सुंदर नहीं दिख रही है। दैट इज द प्रॉब्लम। तो शायद अगले सीजन के बाद उनका रूप फिर से वापस आ जाए, फिर ग्लोबल इन्वेस्टर्स भी आ जाएंगे। लेकिन ये टेपरिंग इंपॉर्टेंट चीज़ है। और बीच बीच में क्या होता है कि मार्केट एक मुद्दा से एकदम ऑब्सेस्ड हो जाता है कि अभी और कुछ इंपॉर्टेंट चीज़ नहीं है, सिर्फ यूएस में टेपर $10 बिलियन महीने का कम हो जाएगा कि नहीं। मेरे ख्याल से ये फेज चला जाएगा, लेकिन फिलहाल मार्केट का फोकस बहुत उस पर है। तो मेरे हिसाब से अगर जनवरी और फरवरी से पहले यूएस ने अपना टेपर प्रोग्राम अनाउंस कर दिया तो रुपी डॉलर में थोड़ा झटका आ सकता है और स्टॉक मार्केट में भी थोड़ा झटका आ सकता है।
कॉल पुट हम लोग प्ले करते हैं। तो जिस दिन इन्फोसिस के रिजल्ट आने वाले थे उस दिन कॉल की 3300 कॉल की वैल्यू कुछ और थी, 114 के आसपास थी। दूसरे दिन रिजल्ट आता है, स्टॉक 3300 को क्रॉस कर जाता है, मगर कॉल की वैल्यू 90 के बिलो चली जाती है। सेम टाइम, एट द सेम टाइम मॉर्निंग में जिस टाइम रिजल्ट पता चलता है सबको। तो ये ट्रांसपेरेंसी कैसे आई, या इमीडिएटली हम लोगों को उसका आंसर या कैसे मिले? मैंने सेबी पर पोस्ट भी किया था अपना क्लिक करके उसे, मगर definitely a single voice cannot be so high.
When you are looking at trading in options, then you have to understand what options is all about और उसकी valuation कैसे होती है, उसकी value कैसे derive होती है। तो जो सबसे important aspect है options की valuation की वो है implied volatility। जो implied volatility है in simple terms it is equal to the uncertainty which is there in a particular event। तो आपने जो देखा इन्फोसिस में कि although the stock price went up, the value of the call did not go up because the implied volatility fell quite sharply। अभी ये सब जो चीज़ें हैं ना वो काफ़ी टेक्निकल चीज़ें हैं और अगर आप प्रोफेशनल इन्वेस्टर नहीं हो, अगर आपने कम से कम थोड़ा बहुत ज्ञान नहीं पाया है आपने ऑप्शंस की ट्रेडिंग में, तो आप इसमें न जाए यही अच्छा रहेगा। सो ओनली इफ़ यू हैव experimented with trading and you are successful, only then you should venture into trading. Otherwise, it is best to be a long-term investor in stocks.
Okay, that's the time we've got on this episode. We hope you enjoyed watching it. We also hope we're set up for a profitable 2014 and there's lots more good things coming the market's way. We'll catch you again another place with the Investor Camp. From the entire team here, goodbye. Thank you for watching.